In fact, smart entrepreneurs can shelter tens of thousands of dollars from taxes every single year just by using the right financial accounts. In this video, we're going to break down the top 3 best tax-saving accounts for entrepreneurs in 2026. And I'll also show you real-life examples of how business owners use them to keep more of their money while building wealth at the same time. Let's start with number 1. The first and most powerful tax-saving account for entrepreneurs is the Solo 401k. A Solo 401k is designed specifically for self-employed people or business owners who don't have full-time employees. What makes this account so powerful is that you can contribute to it in 2 different ways. First as the employee, and second as the employer. This allows entrepreneurs to contribute significantly more money compared to traditional retirement accounts. In 2026, business owners can potentially contribute up to around $70,000 per year, depending on their income. It means you can dramatically reduce your taxable income while investing for your future. Let's look at a real example. Imagine Sarah, who runs a freelance marketing business. She earns $100,000 per year. Without any tax strategy, she would pay taxes on the full $100,000. But instead, she decides to contribute $40,000 into a Solo 401k. Now her taxable income drops to $60,000 instead of $100,000. Not only did she reduce the taxes she owes this year, but that $40,000 is now invested in the market and growing for her future. If that money grows at an average return of 8% per year, it could turn into more than $400,000 over the next 25 years. That's the power of using tax-advantaged accounts. Now let's move on to the second best tax-saving account for entrepreneurs, the SEP IRA. SEP stands for Simplified Employee Pension, and it's one of the easiest retirement accounts for self-employed individuals to set up. This account is extremely popular among freelancers, consultants, gig workers, and small business owners because it's simple and flexible. With the SEP IRA, you can contribute up to 25% of your income each year, with a maximum contribution limit that can reach tens of thousands of dollars depending on your earnings. And just like the Solo 401k, every dollar you contribute reduces your taxable income. Here's a quick example. Let's say Mike is a real estate photographer who earns $80,000 this year. Instead of paying taxes on the full $80,000, he contributes $20,000 into a SEP IRA. Now his taxable income drops to $60,000. That $20,000 is invested in the market where it can grow over time. If Mike continues making contributions like this throughout his career, he could build a retirement portfolio worth hundreds of thousands or even millions of dollars. Another reason entrepreneurs love SEP IRAs is flexibility. If your business has a slow year, you can simply reduce your contribution or skip it entirely. There's no pressure to contribute a fixed amount every year. Now let's talk about the third account, which many entrepreneurs completely overlook. But financially savvy investors often call this the most powerful tax account in America. It's called the Health Savings Account, also known as an HSA. An HSA has something called a triple tax advantage. First, the money you contribute is tax deductible. Second, the money grows tax-free while it's invested. And third, withdrawals for qualified medical expenses are completely tax-free. This means the government never taxes that money at all. In 2026, individuals can contribute several $1,000s per year into an HSA, and families can contribute even more. But here's the strategy many wealthy entrepreneurs use. Instead of spending the HSA money immediately, they invest it and let it grow over time, just like a retirement account. Here's an example. Let's say Jessica contributes $4,000 per year into her HSA and invests that money in index funds. If that investment grows at an average return of 8% annually, after 30 years it could grow to roughly $450,000. All while receiving tax deductions along the way. Later in life, that money can be used to pay for medical expenses completely tax-free. And since healthcare is one of the biggest costs in retirement, this account can become extremely valuable. Now here's the real strategy smart entrepreneurs use. They don't rely on just one of these accounts. they combine them. For example, an entrepreneur might contribute $40,000 into a solo 401k and another $4,000 into an HSA. That's over $44,000 in income that is shielded from taxes for that year. Over time, those tax savings can add up to hundreds of thousands of dollars while simultaneously building long-term wealth. At the end of the day, most entrepreneurs focus on making more money. But one of the smartest financial moves you can make is learning how to keep more of the money you already earn. Taxes are often the biggest expense business owners face. And using accounts like a solo 401k, a SEP IRA, and a health savings account can make a massive difference in your financial future. If you found this video helpful, make sure you subscribe for more content about investing, building wealth, and smart financial strategies for entrepreneurs. And if you want to learn another powerful strategy, check out the next video about how entrepreneurs legally reduce their taxes even further. Thanks for watching, and I'll see you in the next video.